Good evening, everybody. Okay, kind of a consolidation day in the market. But as the Japanese rice traders say, let the market tell you what the market is doing. The market is still showing us that they don't have any enthusiasm yet to break out to the upside. We had a doji sandwich, which would imply more upside. So right now we've got two scenarios. One, they're coming back to test the 50 and the T-line and can do a J-hook from there, which would be confirming the strength of the doji sandwich. Or if they can't hold here, they're coming back down to the bottom of the channel, which means we're still in this sideways mode. So right now, the best strategy is to be both long and short in this market. The Nasdaq is compelling to show us that it's stuck in this wedge formation. Top here, the bottom's here, just sideways. Needed to see this break out. However, it did come back down to the T-line today and did a doji type day. So this makes it fairly simple to tell us which way the market's going based upon how the pre-market futures open up tomorrow. If they open up positive, we're still in this uptrend and still have a potential of breaking out. If they open it lower, tells us we're probably still in this sideways mode, really not going anywhere in this market just yet. Let's see, can you teach us how to hedge? My hedge in a market like this, having both long and shorts, because there's going to be out of the whatever you want to calculate, whether it's 8,700 or 10,000 trading entities out there, there will be 5 good positions to be in long and 5 good positions to be in short without having to worry about which way the market is influencing the trades. Okay. Crude oil was hanging in there, but it's trading lower after hours. Let's make this. But it's still in this uptrend. Now today, somebody came out, I think from Citibank, and said it could go as low as $20 a barrel. Well, when I listen to that and I look at the chart, I just say, which way is the majority of the people thinking it's going right now, meaning the actual buyers and sellers? They're still moving this up. So they've hit the 50. Now we have to see whether there's going to be a bobble in here or whether they're going to keep moving it up and try to go through the 50 a second time. 10-year notes been pulling back, so bond prices going down, rates going up a little bit, but we're still in this big upward trend channel. Nothing yet so severe that it's going to change the interest rates. Gold. No, let's see. Maybe we ought to do it like this. Gold is still probably now waffling in there, a kind of a bobble in here between the T-line and the 50 now that it's come back to the 50. But I wouldn't put any major bullish positions on until it breaks this downtrending channel, thus the T-line. Is a bobble a candlestick pattern? No, it's just kind of a short term for a long explanation of they come down, in this case, hit a support level and bounce it back up, kind of bobbling it around to the T-line, and then if they bring it back down through this area, that's a good, that's a bullish Harami on gold, but you're not quite in the oversold area. So my suspicion is they're going to bounce it back up to the T-line or the 200, and then if they fail, they're taking it back down again. That's right. Bobble is an inside event. That's right. Staying in between the lines. I guess we could do silver. Silver's still in this downtrend. And notice where it's turned around. Right smack dab off the 50 with a doji evening star type signal. So you stay short until you see a buy signal. Yeah, I've been fishing, but that's a bobbin, isn't it? Let's see, what else we got out there? The dollar. Dollar's still holding up in this upward trend channel. The 20. So a lot of people ask, well, why do you have the 20 on your charts? So a lot of time, if it's a steady uptrend and they don't come back to the 50, they're going to use the 20. Could you go through the SPDR selects to see sector big picture activity? Oh, right, Herb, I don't even know what you asked. Would it be safe to trade the Swiss franc? Let's see. Oh, right now the Swiss franc isn't giving you too much of a clue. It's caught in between the 200 and the 50. No, that's not right. 200 and the T-line. I wouldn't know what to do with that one right now. All right, what else do we have? Silver, the dollar. Soybeans, absolutely sideways. Wheat starting to come up a little bit. Not anything with any great, well, I guess it's on an all right trade. So this is where a lot of people say, well, do you use the Fibonacci number or the Fibonacci numbers? I do when I can see there's been an obvious trend and now there's a bounce. Now look at the obvious trend. Where did this reverse? When they moved away from the T-line, did a big shooting star, a bearish engulfing signal, and traded eventually back down through the T-line. You could have stayed short right up until this very day, and where would your stop have been? Right here at the previous day's open. And why would that be? Because you were in the oversold area. In the oversold area, down from the T-line, if they came back up through that level, obviously they're probably going to go up to the T-line. What commodity trades did you make today? Right now, I am short crude oil, but that's only because I held on to crude oil too long today. Let's see, I don't know what crude oil is still down a little bit after hours. Bah humbug. It's down 50 cents right now. That's on the, so if you went to the 10-minute chart, you're still trading below the T-line. And then even if you went to the 5-minute chart, it's still kind of in this downtrending channel. And something in animal proteins today. Oh, I don't know what that was. And natural gas, as you can see, it's sideways. Now it's done a little morning star signal, but I would suspect the next resistance level is right here. I mean, there's no trend to, oh, I'm sorry, that's the 5-minute chart. Let's make this bigger. So you're still in this downtrend, but it looks like it's trying to bottom. Notice how we've gotten down here and we're getting a few indecisive trades. Oh, lean hogs. Yeah, I'm short lean hogs right now. Well, because notice in this downtrend, you notice the reversal signal? Well, that's not a reversal signal. That was just an up day and a downtrend. So if they open this lower, I'll probably be adding more to the short side. And live cattle I didn't get into, unfortunately. because it was up the limit on Friday. Morningstar signal closed above the T line, and I was watching it this morning. That I told myself if it gaps up, you want to be in it right away, and I got to doing something else. But at some point today, the upward limit of cattle is $3. And at some point, they were trading up around $3.20. So I don't know whether they expanded the limits or not. Okay, let's get back to some of the, see, I think we got all the commodities, did we? Cotton, nice fry pan bottom. You just stay long on this, and now look for the breakout. Coffee, looks like it's got or hit a double bottom here, or at least this is the bottoming area. Right now, you stay long on coffee. You just be aware of what it does once it gets up here to the moving average. This is lumber. No, this is Barclays. Lumber. BAJ5. Well, I haven't traded lumber in so long, I forget what the symbol was. Nah, have to bypass lumber. And copper, retro. Copper, nothing here right now to get excited about moving sideways. All right. With the market kind of still in this sideways mode, I'm still long and short. So, and with crude oil might be backing off, I'm still long by Whiting as long as it stays above the T line. And we're going to get to a lot more of the oils here in a little bit because they got good looking charts. This is ADHD, which has only one thing that it can do. I'd say tonight I should have probably started this off. Oh, sector ETFs. All right. I'm not even sure I know how to bring them up over here. The SPR, whatever. So this is where we're going to try to do my stochastics are 1233. Kind of look at what should be happening based upon signals and patterns. So this one, ADHD, had a good J-hook pattern breakout potential setup, except today it did a left-right combo. Now we're going to be starting analyzing each one of the signals in a little bit more depth over the next few weeks. With the left-right, if you've gone through the quantified signals, you know we started out with Achilles. That was a good move. Close it out today. You can always buy it back if it opens positive. But we're going to be going through each of the what I call the high profit signals or pattern combinations in more detail over the next few weeks. Again, in the quantified video, we know the best friend is your number one. That's your doji followed by a gap up. The next one is like right here where you have a doji gap up. Next one is a left-right combo, which usually is a strong reversal indicator. So the only way to stay long on ADHD tomorrow is it has to open positive and trade positive. If it opens lower, now we've got this to contend with, that we're in a downtrending channel versus a J-hook pattern. So this is why we're going to start pointing this out so that people know that if this fails, which it did today, you want to close it out because that's not what it was supposed to do. Let's see. And you also want to be anticipating what should happen on a good trade, such as we recommended WBA or AI the other day because it was a fry pan bottom. It just got up above the 50, did kind of a doji day today, which makes this very simple. If they open this positive and start trading positive, doji sandwich, they're telling us they're breaking out and they're not concerned about the 50 anymore. This becomes a very good buy as far as not only in the right place at the right time as far as timing, but the magnitude of the move will usually be pretty strong. So essentially what we're able to identify is the setups that not only give us a high probability of being in the right direction, but in a very strong right direction. So same scenario on AMPE, AMPE, a doji right on the 200. If it opens positive, what do we got going? A doji sandwich. If we have a doji sandwich, it means it's closing up in this area. What's that tell us? That tells us we've got this J-hook pattern in progress. So this is where you kind of can use the anticipation of what's happening and being prepared the next day so that you're buying immediately. You're not waiting to see whether it's actually going to move up or not. We know just the probabilities are that if it opens positive after a doji, it's going to go positive that day. And if it goes positive that day, more than likely it's going to do a doji sandwich type day. A J-hook pattern, this is what we call the classic. This is the combination of the fry pan bottom and the J-hook. Fry pan bottom is a big rounding bottom that you couldn't have any good situations to be trading until it comes out the other side. And we were looking for a big breakout, either a big huge day or even a gap up day. And when it comes out the other side, what is our expectation? A very strong price move. Now a J-hook pattern has a prerequisite. It has a very strong price move, and then it pulls back indecisively. And notice how indecisive the trading was here, especially when it got back to the T-line. Doji hammer, little trading, and now it's starting to curl back up, doing the J-hook. And we know that if this is wave 1, wave 3 should be the same magnitude. So even if you missed this move right here, you can pretty much calculate whether this is going to be a profitable or good enough profit to get into on this move. So that's a J-hook. Now CSTM, this is where you observe the obvious. The obvious was we were in a nice uptrend. We did a shooting star doji, evening star signal. This makes it easy to trade. If it opened positive, right, it needed to trade positive. But if it starts trading back down below the close of the previous day, that tells us we've got another dark candle setting up. Where are we likely to go to? At least to the T-line. And I say at least to the T-line. So the best place to close out a position like this in the overbought condition is when it's starting to show more selling and heading for what we know would be the obvious spot to look for support. Is it going to support there in the T-line? We have no idea. It could go right on through. So this one should have been closed out at this level, if not at this level, and definitely at this level at the end of the day if you didn't get out prior to that. Oh, Deo, I don't know which one, which chart you're referring to. VIMC, we're still in this one. Because the difference between a reversal signal and a non-signal, which is what we saw today, even though it was trading down, this is not a reversal signal of any sort. Oh, I forget which one it was. Was it ADHD, Dale? No. Oh, AMPE. Is that not a J-hook at 425? Oh, not necessarily. Now, that was just kind of consolidation. This, you can see there's a hook to it. Now, you can have a J-hook, which is up, flat, then up. But this was just more consolidation. And it wasn't really anything yet that had started a big trend. But this was a very simple process for holding this position. You held it as long as it didn't close below the T-line. And what else we got here? Flex. Flex had a good chart last week. Kicker signal, Then we had kind of your bearish engulfing signal. It opened and traded positive, so a perfect place for the anticipation of where it might head back to would be that if it opened and started trading positive, you just put a stop at where it opened, because if it came back down through there, that was confirming the bearish engulfing signal, and more than likely they were coming back to the T-line. I'll get to all of them, Sandy. Don't worry. Which we can do some of the biggies right now. Amazon, somebody asked, should we be ready to go short on this one? And the answer is not necessarily, because what usually happens out of a big move like this are 45 degrees. So I on one of these, I'll stay long as it doesn't close below the T-line. This is the 3 T-line. This is the 3 exponential moving average, which is a good, faster, what do I want to say, indicator that if you're starting to move away from the T-line, now the 3 T-line comes into effect. So it's the 3 exponential moving average. Let's see, and then Netflix, that had the same type of chart where when they took it up, you just stay long, because it'll be in a 45 degrees as long as they don't close it below the T-line. Now, look at your stochastic starting to head down, and look where it closed today, right smack dab on the T-line. And what do we know about the doji? We know very simply that it's going to move in the direction how they open it after doji. So this means to stay in it, it needs to open positive tomorrow, because if it opens lower, they're going to move it lower. It's time to take profits. On Disney, looking the same as Amazon. Yes, that's a 45 degree. Remember, the bigger the move, especially coming off a buy signal, there's your hammer Harami telling you that the selling has stopped. The next day they gapped it up, and then they gapped it up through the resistance level. That tells you after the buying, there was such strong buying because there's been a major change of investor sentiment. Anyways, let me go. If I'm skipping over your questions, it's only because we could get to some at the end. Tesla, you stay long on this one as long as it stays above the T-line. And Apple, ruh-roh. Apple, there's your message right there. Even though it opened and traded lower, they gapped it up all the way from here up above the previous open. Even though they backed it off, there was still a lot of power coming into this. And the next day, what we wanted to see is if they were going to open it lower, they're probably coming back to the T-line. If they opened it higher, that told you the profit taking was over. Right now, you just stay long on this one as long as it stays above the T-line. And all right, let's zip through some here. Fro was pointed out today in the chat room. That's a nice bullish engulfing right smack dab on the 50-day moving average and above the T-line. And if it opens positive tomorrow, it's pretty much breaking this downtrending channel. You can be buying this one. And where's your stop? You don't let it close back below the T-line. Yeah, hold your individual requests until when I tell Jim to do the double line, then you type in your request. And let's try to keep them to 2 so we can get to everybody tonight. What did I just do? Throw. CR. Now this is, again, the reason you want to know what the nature of each signal is. Notice when they pulled back over the last few days, they did it very indecisively. And where did they not close? They did not close below the T-line. This is why you always want to stay in until you see a candlestick sell signal and a close below the T-line. And notice what started this one. It had some little bullish moves, then a gap up. And that gap up pretty much told us we could stay long as we didn't close back below the T-line. Nadal, look at the big fry pan bottom. So this is what we want to kind of observe at a fry pan bottom. Remember, we're looking for buy signals in the oversold condition. Except when they get into a pattern, like a fry pan bottom, usually the breakout is going to occur when your stochastics are already up in the overbought condition. So know the difference between a pattern breakout and a reversal from a signal. And notice what it did. It came up through the 50, and now right smack dab at where this pattern started, they gapped it up and took it up big. That tells you there's going to be more. There's a gap up here. So you've got this, probably you can be buying and just use the T-line as your stop at this point. ANIP. This one's about ready to. Notice the big fry pan bottom, and we've closed just about where this fry pan bottom started. You can be buying this one, especially if they gap it up and breaking out into new territory. Now, this is where I'm looking for a big move to break out, because that tells me the enthusiasm's come back in. I would rather pay up for it, knowing that it broke out, than try to buy it beforehand and then be stuck in it or having to get back out because it didn't break out to the upside. Let's see. We got Con on here in a minute. EPRS. Anytime you see that inverted hammer in the oversold area and they confirm it positive, the probabilities of being in a correct trade are extremely strong. I'm going to say at least 95% or better to the upside. Oh, I think right the curve, that must have been you. Everybody else, I think everybody else has pictures. So this one I wouldn't be afraid to be buying on positive trading, because again, the probabilities are that anytime you see an inverted hammer in the oversold area confirmed the next day, you want to be buying. It's telling you that you've got an extremely high probability trade setup. Okay, good. Good to have you back, Ride the Curve. There's that fry pan bottom. Where did it break out? Right about exactly the same level that it peaked out before. And where did it go to? Right up to the next resistance level. Now this stock apparently, and this is where I'm not afraid to be buying stocks if I see them coming right up to a resistance level, because two things are going to happen. Either it's going to open lower and trade down, I get a small loss, but the probabilities are they're going to break it out, and if they do break it out, usually the magnitude of that upside is very, very strong. Now, if I had bought this here at 275 and it hit 4 right here smack dab on the 200, that's when you flip over to your 10-minute chart, because now you know there's a big move in it that if it starts fading back below the 10-minute chart, I can close out the position because there's huge profits. And if it's right at the same level on the 10-minute chart is where the 200-day moving average is, I just wait until it comes back up through that level, and which in this case it never turned around and came back up again. So it just kind of keeps me out of a trade that's already got huge profits in it and they're already selling it off. CONN, Con, did break out. Let's get this. Whoops, now we're on a 5-minute chart. There's your little fry pan bottom, and notice what they did to break out. Also, you've got kind of a scoop fry pan bottom, which two things are going to happen. At the end of a scoop, you're going to have a slingshot effect to the upside. Fry pan bottom, you're usually going to have a very strong price move. So this whole visual setup tells you after all this indecisive trading, great decision which way they're going to go. At this point, I'd stay long, but I'd still have my stop right here. It shouldn't come back down through that level. That's telling me they'll probably be coming back either to test the 50 and or the T-line. Let's see, TTI. You can see this one had a kind of a little flutter kicker, and where did that occur? Right here at this little breakout level. And what do we know about a flutter kicker? I'm not sorry, not a flutter kicker, a doji sandwich. There's going to be more upside. So this makes it very simple. If they open this positive and start trading positive through the 50, you want to be buying, because that tells you your next target is probably up here to fill this gap, because this resistance area is gone. And WPRT is one that they've been throwing around quite a bit in the chat room for the last few days because it broke out nicely. Again, from this fry pan bottom. And where was the breakout? Right about exactly at the 50-day moving average. So we know that this is a setup for a very strong price move. And we also know that everybody and their brother is watching to see what it does once it gets to the 50-day moving average. We could be buying early, knowing what the expected results should be. Then when it breaks through, that's where we can expect everybody else to start piling in. Now, notice what we had, a doji sandwich. Are we end of this uptrend? Probably not. A doji sandwich usually indicates there's going to be more upside. Let's see, we did that one. QTWW. Oh, let's see. WPRT. Oh, this is why I had WPRT on here. Notice a little flutter kicker that broke this out through this downtrending channel and started this uptrend. So just this signal here alone told us that there was lots of strength coming in, because a flutter kicker signal is where they've kind of gapped this back up toward the open, not quite at the open. But what do we know about a doji? We already know they've gapped it up. And if they open up positive the next day, if we took out this little flutter, we basically have a kicker signal, which is one of our strongest signals. Now, these are just delayed during the day, so it has nothing to do with this right now. Bullish engulfing on AAVL. Notice what got this started to the downside, a bearish left-right combo. Big bearish left-right combo. You stay short until you see a buy signal and a close above the T line. So if I was short, probably would have stopped out right here, knowing that it was coming up to the T line. Now, if I'm a buyer, basically if it opens positive tomorrow, I'm buying immediately. And then if it closes back below the T line, that's my stop. I'm right back out. But the probabilities right now, as the Japanese rice traders have told us, that if you see a bullish signal in an oversold condition, the probabilities are you're now in an uptrend. Okay. Yeah, usually I'll wait till the close, but if you create a signal that's not going to be reversed between now and the close, meaning if it's 20 minutes before the close, I'll close out and but I usually wait till the close. How do you select stocks? I listen to scanner, CD, but not visuals. Very hard to follow. D, it's actually very simple. And I guess I could do it's so simple. The formulas are out there. Once you put the formulas into your scanning softwares, whatever you're using, whether it's Metastock, TCNet, right now we're going to have scanning capabilities put on TOS, Thinkorswim. I think they've got them, getting them set up right now on TradeStation. They're out there on NinjaTrader. So once you put them in, then all you have to do is refresh them each day, and they're going to bring up the signals for you. Let's see, VJet. VJet is your perfect setup. Notice the wedge. Notice the little slow curve. Now your doji sandwich makes it very simple. If they open this positive, this whole big bottoming action is now going to start running. Oh, Brad, the formulas are on our site. And if you go to www.candlestickforum.com, there's the column on the left-hand side. And then I think if you click on major signals, Then it will. Then the left-hand side column will show TCNet formulas, and that's you'll find them in there. And if that doesn't help you, just email Abraham at candlestickforum.com, and he'll get you the link right to that page. SSE. This is where you observe the obvious. You've got a fry pan bottom, you got the bullish signals, you're above the T-line, and you broke out through the 50. Two things are going to happen. Either you're going to have a big breakout, or they'll bobble it for a day. You see if the 50 is going to act as support, and if it does, then they take it off pretty strong. Can you please go through downtrend reversal versus pull up signals and or patterns? Pull up, pull back signals. Is that what you're looking for? I should have some in here. Maybe we've already gone through them. I see one out. There's another one, Legacy. Fry pan bottom, broke up through the 50-day moving average. You just stay long on this. Now, you're in a breakout area. I just simply put my stop at the previous day's open. Each day it trades higher. The next day I put it at the open. Yes, the Mike, that's in the process. I would suspect probably pretty close to the end of the week. Plus, if you need any individual scanning done or scanning formulas, in here each day is Ed C. Just ask him, and if he doesn't already have the formula, he'll get it up for you and get it to you. That's it. You set your stops with strong uptrend, downtrend, Marabuza candles with gaps in between. With gaps in between. Usually the is still this. If it's overbought, it's still the previous day's open. Let me get through the canned ones here. Here's another one, PDS. Either it's going to break out big, or it's going to do a little pullback and test the 50. So right now, unless crude oil picks up strength from where it's trading after hours, you might see some pullbacks in some of these oils. Rig, same scenario. Good possibility they're going to come up and fill this gap, which would mean the breakout was still in progress, making the next target your 200-day moving average. Yeah, crude oil is still down about 50 cents. Not anything devastating as far as changing the direction of the chart, but it might just be kind of a little bobble in here now that the crude oil prices have hit the 50 today. And CRR. Again, these are fry pan bottoms. They're all setting up. And again, the advantage of a fry pan bottom is that in an uptrend, all stocks will go up. But in an uptrend, if you've got a breakout from a fry pan bottom or a J-hook pattern or a scoop pattern, your uptrend is going to be a lot stronger. So you're going to be able to make good hay while the sun's shining. Yeah, a lot of this is kind of the T-line crunch, but it's also kind of contributing to the visual analysis that this is a fry pan bottom that has broken out through the 50. Line was another good-looking chart. Again, these are all energy stocks. Big fry pan bottom. There's your doji sandwich right up to the 50. Opens positive the next day, telling us that the 50 is not acting as resistance, and about where it started indecisive trading on the fry pan bottom has now been breached. There's a gap up here that this one could be heading to. A lot of good charts over in the energy area. Here's another one that if it opens positive, it'll be breaking out through the 50 on a fry pan bottom. WG. WG, same scenario. This is kind of your doji sandwich breakout. WW, and I would still not be too concerned about this one as far as being in a good uptrend. I wouldn't want to see it open a lot lower and head down to the T-line tomorrow, but if it did, it better bounce and come right back up, which is not going to be unusual for some of these. So as long as they stay above the T-line, especially coming out of these fry pan bottoms, just very simple rules. You hang on to it as long as it doesn't close below the T-line. There's NOG, fry pan bottom, cup and handle. Look at the little doji left-right combo scoop type breakout. You just stay long, probably heading to fill this gap, and then possibly the 200-day moving average. Yes, Ed has been a great asset in here, and that's kind of what we try to keep the atmosphere of this room is. I know in some other rooms people get pretty snooky at each other. In this room, hopefully in our room, you see that everybody's kind of trying to help each other instead of trying to pull each other down. And Ed is just, and like many other people in the room, very unselfish with their information. UNT, little cup and handle. This is what we call the bobble. Came up, hit the 50, pulled back. Notice it couldn't close below the T-line. Now it's coming right back up through the 50 again. If you buy this one, you got the potential of these big breakouts. Now that's also a function too that crude oil, if it keeps strong. Now it backed off today because I may have mentioned that the Citicorp analyst said that crude oil could go to $20 to $30, but that's not what the chart is telling us right now. So that's why I never listen to a single analyst. I let what the market themselves or itself is telling us. Another fry pan bottom with a breakout. Where's the likely target? Up here at the 200-day moving average. Snooky, that's kind of snitty. These are highly technical terms. All right, now, things like ENPH. Notice how this one started. There's that little inverted hammer bullish confirmation. That inverted hammer bullish confirmation is just an extremely high probability trade. Then notice what they did the next day. Open it up and start trading above the T-line, confirming this. So this is why we can get into trade setups early, just knowing what the results of a signal and the confirmation should be. And that's, which one was it? New Link. Kind of your inverted hammer doji, big bullish engulfing. I would suspect this one's going to definitely be in a very strong uptrend. Okay, well, knowing that that was an inverted hammer. ACHN, yes, had that little inverted hammer. But now, so you're probably in an uptrend. If you had bought it today, it better open positive and start trading positive tomorrow. If it starts trading back lower, that tells us this has failed. But as long as, if it opened lower, I'd get out of the trade. But I just watch to see what it does once it gets back down to this level to see if they do another buy signal here. What was the stock chart right after line? Did I do MCEP? MCEP. Now Herbalife is coming back around again. Fry pan bottom, staying above the T-line. Very simple. If they start trading this above the 50, you can start buying it using the 50 as your stop. And PayC. Oh, no wonder I keep everybody so late. I talked too long. Pacey, got a little J-hook pattern. Started with a left-right combo. Can't get below the T-line. Where did we close? Right at the breakout area. If this opens positive, now you can kind of expect that you're going to be in the next wave, which would probably be the same magnitude as this wave right here. Is there a way to see a potential blue ice failure, or just wait for confirmation? Joe, what one are you referring to? Yes, you can always see a blue ice failure. That's once they've come through. They came through and came back up. The failure would be a candlestick sell signal. A shooting star, a doji, dark cloud, something that told you they failed at this level and that they're probably heading back down. Those are different charts during the day. It's either Metastock or TC 2000 that I bring up during the day. I use these charts because they're a lot faster to get to the signals, and I've always CQG is this chart system, and it's kind of the grandfather of all the charting systems. A lot of the other chart services use their feeds off of CQG. Now here's a J-hook pattern, strong price move. Notice the strong price move was a kicker through the 200, pulled back. Now somebody was asking, how do we know if this is a reversal versus a pullback? Because notice the nature of each one of these signals, very indecisive. It wasn't like they were selling it off hard, like a big candles to the downside, very indecisive. And then once they got back to the T-line, notice what they did. They did a buy signal, and then they did a belt hold signal. And what do we know about the belt hold signal? Yes, Hal, we'll get to the shorts here in a minute. We know that they wipe out a lot of sellers on a belt hold, and there's no sellers in the front of them or in front of them after that. So that means any buying is going to act strong. And if there was any buying coming out of here, what type of pattern do we have? We have that J-hook pattern, which tells us if they've moved from whatever this was, 39 to 49, they're probably moving from 47.50 up to 57.50. So when you can make that calculation, not only can you be buying, but you can be doing good strategies like buying a bullish spread, where you might buy a 50 and sell a 55, or even go a little bit more aggressive and buy a 52.50 and sell a 57.50. Let's see. I think this is post-property or post. Oh, that was it. We just did it. Okay. OPK, during this uptrend, notice what they did. They kind of did a little scoop pattern and did a slingshot effect to the upside. And notice what broke out the scoop pattern, a doji sandwich. Again, what's implied with seeing a doji sandwich? That there's going to be more upside. So it makes it for a very strong trade. And how long do you stay long? Until you see a sell signal and a close below the T-line, with the caveat that the further away you move from this T-line, the higher the probability you want to start watching to see when the next sell signal occurs. Because if you start seeing a sell signal, you can take profits with the anticipation they're going to come back and test the 50-day, or I'm sorry, the T-line. Now, why did I have that? Oh, because right now in SIGM, got kind of that little scoop pattern. If it stays above the T-line and breaks out through this level, you could have a slingshot effect that would be basically the same magnitude as this move right here. So again, all this is kind of getting everybody's eyes accustomed to anticipating what's going to be the next price move. There's your cradle pattern. Where do you start looking for buy signals? When they start gapping it down in oversold conditions. Now notice the flat trading and then bullish confirmation. Very simple on this one. If it opens positive, you buy immediately. Because what is this pattern? The cradle pattern, which tells you there's going to be a good strong uptrend afterwards. Okay, now there's some others right now, like G-Pro, that when you can analyze that you're already in a downtrend, and then they start gapping it down through the T-line again, stochastic's turning back down, you can pretty much calculate where the next support level is. If you draw a line right down through the bottoms here, you're coming down here probably into the $38 range. Makes for very good setups for buying puts. Also, if you get up in an overbought condition, you definitely want to put your stop at the low. Because if it comes down through there, that tells you where they're going to take it, probably back to the T-line. Will they support the T-line? Who knows? You could always rebuy it. But what you want to do is keep yourself from being in a situation like this. This is why over here, it needed to see a bullish open and trade positive to tell you the T-line is not acting as a resistance. So where's the logical place to put a stop? At the low of this doji. That would have told you that they weren't going up. They were heading down, get out of the position. CRK. Again, this is where you observe the obvious. You're in a downtrend. They came right smack dab to the 50 and did an evening star type signal. They closed right here on the right at the T-line. Makes this very simple. If they open this lower tomorrow, you can start shorting them, because where do you think your next target is? Probably at the next support level down here someplace, which would give you a good 60-70% move to the downside. Oh, GoPro, yeah, that's where they put the cameras on your head or in your hat. And if you're skiing, you can video everything you're looking at as you're going downhill. Where do the sellers take control? You're in a downtrend. Now you have a kicker signal telling you they're definitely getting out of that position. Abercrombie Fitch, gap down. Notice what you got. You got kind of a dumpling top. And where did this downtrend start just recently? With a bearish signal right here, dark cloud, back below the T-line. Now they're gapping it down. Definitely be going short on this one if they open it lower tomorrow. SNCR, what did this tell you? Huge left-right combo bearish engulfing signal. Just remember kind of very simple truism about candlestick signals. The bigger the signal, the more compelling. There's been a change of investor sentiment. This one could be going all the way down to this trend channel, taking it down into about the $36 area. And BNFT. Oh, daycare. Okay. BNFT. Notice the gap down at the T-line again, telling you they're still selling this one off. You can still stay short on this one. Yelp. What did I do, Yelp? Yelp. Anytime you see that big, huge gap down, there's going to be more to follow. Notice what this gap down did. They broke right through this last support level. You stay short on one of these until you see the first buy signal. SWIR. Another one that did kind of a bearish J-hook pattern, and once it came back below the T-line, where do you think the logical target was? Still probably down here at the 200-day moving average. And ISIS, when it broke down, bearish engulfing signal. Notice how indecisively it traded in here. It was up, down, but then bam, you had a big another big signal below the T line, you just stay short until you see a buy signal. All right, so that's about all I got. This is why we're both long and short in these markets, because this market really still isn't telling us. It had the potential of breaking out and taking this whole wave into another, or this whole sideways movement now into a strong wave 3. But last couple of days have told us, well, they're still stuck in this channel, except if they support here on the T-line and the 50 and turn it around with a J-hook pattern, we know if this is wave 1 of the J-hook and this is wave 3 of the J-hook, they are breaking out through this level. All right, with that, if anybody's got any general questions on candlesticks, general questions. A left-right combo is a doji followed by either a bullish or bearish engulfing signal. See if I can find one. Oh, let's see. BDSI had a left-right combo the other day. Let me make this big enough. See the bullish engulfing after a kind of a doji. That's usually starting of a good strong uptrend. Okay. Where is the best place to set a stop on a morning star? If the bullish candle, the third candle that closed more than halfway up, that first candle of that pattern was the day that the bulls were telling you they were in control, the Japanese rice traders have a very simple technique. It shouldn't close below the halfway point of that candle, or otherwise that tells you the bears are back in control. You close it right back out again. What do you mean by saying it needs to confirm? That once you see the signal, which one? Can't remember which one I was. But if you see a signal, you want to see it confirm the next day, which means that signal, if that's a bullish signal telling you the bulls are in control, you want to see it confirmed by seeing more strength the next day. Then you can go after it. What you don't want to see is they see a bullish signal in the oversold condition. Then the next day they open a lot lower, well back into that previous day's candle. That tells you the bulls aren't there. You don't execute that trade. Are dojis what percent accurate? I don't know that for Stickle. I just know that if we see a doji in the oversold area and it opens positive the next day, the probabilities are extremely strong, meaning I want to say at least 70% or greater that you're going to be in a reversal. If a candle at the top of a run-up is above the 3 EMA and has a long upper wick, is that a reversal signal? Yes, that now becomes more like a shooting star. Yeah, the other point of that 70%, which is great, is that also means 30% of your trades aren't going to work. Now, I always come back to this this topic because back in the old days before candlesticks came along, and I was even a stockbroker, I figured with my superior analytical abilities that any time I decided it was time to buy a stock, it should be going up. And when it didn't go up, it was because everybody that wasn't as smart as I was didn't see the reasons for it to go up. And I lost a heck of a lot of money thinking like that. But when I finally came to the realization that even if you've got the best trading strategy or method in the world, which I think candlesticks are, that you're still going to have 1 out of every 3 of your trades not work. So if you're mentally prepared for that, then you've got a lot of that emotional trauma that the trade's not working, what do I do? If the trade's not working, you just say to yourself, all right, this is one of those 30% that didn't work, close it out, and move on to something where the probabilities are in your favor to go in it or go back into another trade. Is this still used in the East? I've discovered that the people in Japan don't have any more knowledge about candlesticks than anybody else. And it's just like it's just like anything else. If you're an investor and you see so many things out there being thrown at you that are successful, just try it. You don't know which ones to use. The reason I kept coming back to candlesticks is it's been around for 400 years, and a basic rule of Wall Street is if something doesn't work, it's not going to hang around very long. And if it's hung around for 400 years, on top of that, the Japanese rice traders family that developed this didn't become wealthy. They became legendarily wealthy using candlesticks. So it's nothing more than common sense put into a graphic depiction. Everything that you look at and everything I learned in candlesticks, I looked at it and said, yeah, that makes sense. And it was all the things that we're often taught, things that we're supposed to do, but our emotions usually get in the way. So the more I use candlesticks, and the more I realized that the probabilities were always in my favor when I used them. Oh, lean hogs. There's nothing here to tell us there's been a reversal, so I'm still looking for this to open lower tomorrow and continue to go down. Oh, JD, I'm just a legend in my own mind. Let's see, the question RT is asking, if you close a long position due to a sell signal and a close below the T line, do you wait for a buy signal and a close above the T line to re-enter, or you just close above the T line is suffice? Just say close back up above the T line, because remember, our uptrend is in progress as long as we're closing above the T line. If we have, and there's many times that I'll get closed out because I see a sell signal to close back below the T line, but then the next day they open up positive and take it right back up, I'll buy it back in because that, first of all, the sell signal didn't confirm, and secondly, I'm right back up above the T line, which tells me I'm still in an uptrend. Okay, all right, now Jim, do the double line. There we go. All right, Jim, do another double line. We should have most of them by now. All right, SSYS. You want to, this one, now this is a typical reaction when they gap something down. You can be buying this, but your expectation is it's going to come back up to the T line. And then you just watch to see what it does at that point. If it fails, you can go short. That means the strength is still down. If they close above the T line, you know this was the reversal at the bottom. Right now, I would stay long and see what it does if it climbs up to the T line. BIDA, you stay short because you haven't seen any buy signal. AEM, this one you stay short. And you can probably notice the kicker signal that broke this down. I would stay short as long as it stays below the T line, and I would be going short aggressively if it opens lower tomorrow, telling us that the selling didn't stop. And probably to be even safer, if it came back down through that big dark candles open, then you want to be definitely shorting it. And XON, nothing here right now. You do have a little left-right combo. If I was buying this, I'd have a buy stop above today's high. If it comes up there, it's confirming and breaking out of that wedge. How did I jump way down there to BABA? BABA, you stay short until you see a buy signal. SDRL. That's a nice fry pan bottom breakout. You stay long as this stays above the T line. NVAX, another one you just stay long as it stays above the T line. And that's about as simple as your analysis needs to be on some of these. As long as they're staying above the T-line, you just stay long until you see that sell signal to close back below the T-line. UCO has a good chance of coming up to the 50-day moving average. XOP, stay long. Whoops, you had a little shooting star today. So if this opened lower tomorrow, I'd probably come out of the position with the expectation that it's going to come back down and test the T-line and or the 50-day moving average. But that's your shooting star doji that tells you they're going to move it in the direction of how they open it tomorrow. Southern Company, stay short. So you see a buy signal. SPY, am I looking at the right one? Is this a rising 3 method setup? No, not that I see. But it is a potential bearish doji sandwich if they open this lower tomorrow, which means they're going to be taking it back down, probably all the way back down to the 200, because that's where the kind of the trading range has been. CPE, another one where you stay long, except if it started trading off, especially back down through the 3T line, I would tell you they're probably bringing it back down to test the T-line, take your profits. But more than likely, they could be just as well moving this sideways, waiting for the T-line to catch up. FOLD, stay short. It had the potential, and this is why you need to see bullish confirmation. This was a signal that told you the bulls are taking control. What do we need to see the next day? That they open positive and start trading positive. If you had bought it the next day with it trading positive and it closed back below the halfway point of the candle that told you the bulls are in control, you close it right back out, because what did it tell you? It told you they still haven't gotten up above the T-line, and they negated that buy signal. WFM, left-right combo. This one has to open positive and trade positive to stay in it. Otherwise, it's going to be confirming a left-right combo and trading back below the T-line. Venda, there's your left-right combo also. Doji followed by a bullish engulfing signal. Suspect at least to test up to the moving averages. MT, this looks like an overseas one with a little gapping around, but right now all you can do is stay long on this one as long as it stays above the T-line. AUO, stay short until you see a buy signal and a close back up above the T-line. Failed yesterday. What is today? Monday. Failed Friday and failed today. So if this opens lower, more than likely they're bringing it back to the 50. The transportation index is in this sideways channel also. Notice it failed right here at the 50, kind of right near this downtrending channel. So there's nothing right now to show us there's any reason to be dramatically long or dramatically short in these markets. And usually the transportation index is kind of a leading indicator. They're usually buying or selling the transports before the rest of them. KR, another one we stay long, except you do have a potential sell signal, but I say it's potential. The longer a trend stays above the T-line, the more compelling your reversal signal needs to be. Buffalo Wings, this one needs to open positive. If it opens lower, they're bringing it back to the T-line, which means the breakout of this level is now back in this level. You're back in the sideways mode. You probably don't want to be in this one anymore. It needs to open positive and trade positive to stay in it. AEM, bullish engulfing at the 200 today. That's a bullish harami. So you still have to see this confirm with the bulls being there. If they open positive tomorrow, that tells you more than likely they've supported at the 200. CLG. Wouldn't be long or short this one. This one does not have any direction. It's moving sideways along with the 50-day moving average. And CBM, stay long on this one. If you're looking to buy this, if it comes back up through today's open, you want to be buying. That tells you the profit taking's over after a nice fry pan bottom breakout. And CVX, not a very exciting stock, but it's right now in an uptrend. You stay long as it stays above the T-line. And Baidu, nothing here yet either. Wouldn't be doing anything with this either long or short. Just a slow meandering sideways. Sun, stay long. Notice it did a little trend kicker. Trend kicker is where they have a down day. Next day they open it at or above the previous day's open and move it up, even though it's not at a bottom. It's in the trend, which usually indicates there's more upside to come. NXPI. Still kind of stuck in this sideways mode. If I was buying this, it would have to come back up through today's open. Otherwise, you're still in a sideways, slow meandering sideways mode. LCI is a good looking chart. You stay long on this one. And we did Herbalife. Herbalife needs to break out through the 50. Then I'd be a buyer. LNG. Nothing here either. You're sideways. I wouldn't be long or short at this point. This one had the opportunity to break out through this downtrending channel, and it didn't do it. EQT, that's a nice little breakout. Doji sandwich breakout. You can be buying this one with your expectation of moving up toward the 200-day moving average. Let's see, we did AAVL, right? Big bullish engulfing. You can buy this if it opens positive tomorrow. That tells you the 50-day move or the T-line's not acting as resistance. Again, this is where I put the Fibonacci number on. A lot of people ask, do you use Fibonacci's to make your decisions? No, I usually use Fibonacci's to tell me what the signal is my decision maker. This just gives me a target of where the price might move to. And right now, right here at the 50% retracement, right about the 50-day moving average, would be a good spot where the Fibonacci people and the moving average people would all be watching to see if it moved up to that level. ATU, more than likely, after it came back, notice how it's supported right here on the T-line with a bullish Harami telling you the selling had stopped. More than likely, that's your first target, is a 50-day moving average. And did I do that right? VMW. Yeah, you stay with this. Just kind of expect that the next target is the lower end of this channel. You can see there's a channel here, and it's failing at the 50. I would keep the puts. We did Flex. Flex looks like it turned, which means if it opens weaker tomorrow, it's coming down to test the T-line. You don't know whether it's going to stop there, so close it out. If it turns around and bounces back up, you can always buy it back in. United Rental, stay long. That's a left-right combo right at the breakout level, which means if it opens positive, there's still more upside. And HZNP, that's a nice J-hook pattern with a left-right combo. This one you can be buying on positive trading tomorrow, confirming your left-right combo and the fact that the T-line's not acting as resistance, and your J-hook pattern should be back in progress. Twitter, you stay long. Look for a 45 degree to come off of here. Caterpillar's always had a hard time just based on the magnitude of movement. It's not that great, but notice where the reversal occurred. When they gap it down in an oversold condition and do a potential buy signal, that's where you start looking for the buying. Because where do most people sell? They panic sell at the bottom. If you're buying this one, you just stay long as it stays above the T-line. O'Reilly's, another one that probably has a 45 degree. I would probably use the open of that green candle as my stop. It shouldn't come back down below that level. Cake. Cake is kind of sideways. If this opened lower, I'd be out of it because it tells you that they're still heading for the 50 after your big left-right combo over here. It has to open positive and trade positive even to think about staying in it. Big Lots. Same scenario. If this opens lower, you close it out because now you've had a little double top. They're probably bringing it back down. It has to open positive. And junk in the box. I would probably be closing this out on weakness tomorrow because the magnitude of movement is just so lethargic. Okay. All have good seasonality. All right. They don't have good charts right now for the next month. Thank you, Betsy. That's another element that people want to put into their investing is which stocks seem to do well during certain times of the year. So if Buffalo Wings open positive tomorrow, you're figuring it's going to be in a 45 degree to the upside. Slumberger. Just stay long. Use the T-line as your stop. PetSmart. Ooh. Are they being bought out? That's just not a very enthusiastic chart, but I would expect kind of a J-hook, your classic J-hook pattern. So I probably wouldn't be buying this until it came back up through the 82.75 level. And if I owned it, I would hold it, but I wouldn't be really aggressive buyer right here. Micron, stay short. There's that left-right of the T-line telling you that they were still selling this off in the downtrend. Cisco, I wouldn't be long or short either. There's no direction to this one. Whoops. Silver Wheaton, another one that I wouldn't be long, and I probably wouldn't be short here either. Sideways. KPTI, same scenario. Wouldn't be long or short. This one needed to confirm the kind of the cradle pattern, and it didn't. You're back below the T-line. I wouldn't be long or short this one. And again, some of these where I wouldn't be long or short right now might be in a week and a half from now. They've got a good, strong chart one way or the other, and you can do them then. But there's going to be times when there's indecisiveness in a pattern. Mankind, you just stay long. At this point, I probably wouldn't want to see it come back down to the 200-day moving average. LNG, another one that's just kind of sideways. Probably wouldn't be long or short on that one either. And First Solar. First Solar, as you can see, when it broke out, it's pulling back with indecisive candles. So if I was long, it better stay above the T-line. If I was going to go long, I'd put a buy stop right back up here, because if it comes back up through after 4 or 5 days of indecisive trading, that's told you they've gotten back on the horse again and are ready to go. GPC, another one that has to open positive if you're in it to stay in it. If it opens lower, you've lost the fizzle on this one. We did ACHN. ACHN has to open positive tomorrow to stay in it, and then it has to get through the T-line. PSEM, this one should have been closed out today. It needed to close above the T-line, which it didn't do. On top of that, it did a left-right combo to the downside, so you definitely should be out of this one. Chris, stay long. At this point, you put your stop at today's open. It shouldn't come back through there. The oil is probably hitting the, trying to get up to the 50-day moving average. DNR, stay long, but if it opens lower tomorrow, they're coming back to test the T-line. Take your profits. Then you can always come back in again. Coca-Cola, unfortunately, just is not a very active mover. Right now, I would probably be going short on the bearish J-hook pattern if it opened lower. If it opens positive and trades positive, that means you've got a little double bottom going on. So right now you're at a support level. It's going to tell you which way they're going to take it from this area. Baxter, stay short, still in a downtrend. Is a kicker a gap with a large candle? No, a kicker is the kicker is when you have, let's say you had this today, opens here and closes here. The next day they open it at or above this level and go the opposite direction and create a green candle. But it needs to open at or above the previous day's open. So that tells you they basically have kicked the investor sentiment in the opposite direction. We did Netflix. Netflix needs to open positive to stay in the 45 degree. If it opens lower, you close out the position. Line, you stay in, but you just use today's open as your stop. It's still coming out of this nice fry pan bottom. Upside potential is still up here, and this probably line, as well as the other oils, will have to be a function of how crude oil prices trade tomorrow. ARII, just stay long. It's not a very exciting stock, but right now it's in a slow uptrend. Williams Brothers, probably coming back down to test the 50 and or the T-line. So not a reversal in here, just probably backing and filling. All right, thank you, Jerry. Jerry, I can pretty much tell you the reason I know so much about this is before candlesticks came along, I was the worst investor in the world, and I wanted to invest. I got out of the business. I was a stockbroker for 8 years, got out of the business because I realized there was no strategy. The major brokerage firms don't have research people that know when stocks are going up or down. All they can tell you is it's a good company, just hold it long term, and hopefully it will work out for you. But then when candlestick just made sense, everything just kind of fit and turned my investing around 180 degrees. Let's see, SWKS. This one you can get ready to go short. More than likely, they're coming back down to the bottom of the channel, which puts you right back here to the 50. Then you have to see what it does at that point. Did Twitter. That could be. Daryl, I don't follow the VIX, but I let the market tell me what the market is doing. So if they open this lower, especially if they don't hold here, that means they're coming back down probably to the 200-day moving average again, because that's part of the channel. So the only way that this market is going to turn is if we see kind of a J-hook bouncing off the 50 and the T-line, and they take it back up. That's going to be enough energy then to break out through this level and then break out through this level up here. Herb, that was always the contention. If everybody's using something, then it probably doesn't work anymore. But you got to remember, hundreds of traders are using, if hundreds of traders are using the signals, the candlestick signals, then that's just a minuscule amount of people out there with the millions and millions of people trading every day. Now, probably 90% of all traders or all investments are based upon fundamental reasons to be in or out of a stock, which means 10% of the trades are probably based upon technical trading, and more than likely 1/10 of 1/10 of 1/10 of 1/10 of 1% is candlestick people. It's still relatively very new as far as a technique that most investors will use, because when I first started learning candlesticks, I would ask rhetorically on some of the chat sessions, why isn't everybody using candlesticks? They make so much sense and they work extremely well. And the answer was there was too many of them to learn, and I always came back to a simple observation that if they didn't work, we wouldn't be looking at them 400 years later. So what we're looking at, Herb, is the graphic depiction of what's going on in investor sentiment, which is everybody else making their decisions, usually at the times like at a support or resistance level. We can see immediately what those results are. UGA, that's a little cup and handle. There's your bobble. The bobble is when they hit the 50, pull back to the T-line, and then come back up through. It bobbled there for a few days. This J-hook pattern tells us our next target is probably up here to fill the gap. And WLL, this one I still like both on a short-term trade and a long-term basis, mainly because in our long-term picks area, we've got research showing how the position of Whiting Oil as far as their positioning up there in the Balkan field up there in North Dakota, which is now kind of rivaling the same magnitude of production that all of Texas is doing. So on a long-term basis, they've got some huge potential. Let's see, VS. No, VS not sense. All right. I wouldn't be long or short CVS. It's a slow uptrend. I mean, I wouldn't trade it. If you own it, I would probably stay long as it doesn't close back below the 50. But as far as a trader, it's just not enough magnitude of movement in there to make it worthwhile. And ICPT, another one where you just stay long as it stays above the T line. For a kicker, can there be any overlap? There can be, but it doesn't reflect the same magnitude of strength. And I should say, unless it's very, very close to the previous day's open and goes higher, then it's just an up day and a downtrend. Shaw Group. No, Sherwin-Williams. Another one that is the magnitude of move isn't worthwhile enough. This is one that you just have that should be more of an institutional trader where you just stick it in your account and keep it there. Allstate I wouldn't be long or short either. Same scenario. For the last 3 months, it hasn't moved in price one way or the other. Would that be 6 or 8 standard deviations? John, I don't know what that's referring to. And MEP, that's a nice fry pan bottom breakout potential. I wouldn't be afraid to be buying this one on positive trading tomorrow also. So we did PetSmart. Yeah, they're out of the 50 or 60 major signals, or out of the 50 or 60 candlestick signals, there's 12 major signals that if you just learn those and recognize them, they're going to probably be 100% of your trades. The rest of them don't occur often enough to even spend mental time or effort trying to learn them. But it's always good to go back through the book. I usually do every few months, go back through and look at all the charts just to recognize when there is a signal that might not be a major signal. And no, I may not understand what it's doing, but at least if I recognize it, I can always go back to one of the reference books and say, all right, what's this one doing for us? In which group did you say you may long-term pick? Right now, the WLL is probably a good long-term pick. based upon the chart right now, number one, and number two, the fundamentals, which again, we're not trading fundamentals, but the longer, for people that want to hold things longer term, you have to look at the fundamentals to see why those charts are starting to act the way they are. Now, I figure that whiting, it has been thrown out like the baby in the bathwater, because this stock, we were anticipating when we started buying, I think around 65, for it to go to 100. And then when they started selling all the oils off, they were still discounting the fact that whiting has huge reserves up there in the Balkan field. So whiting is one, and Ford has always been one of our long-term picks, with the anticipation that if this breaks through the 200, that over the next 6 to 12 months, we could be in the $25, $30 range. And JNUG, I did something wrong here. JNUG looks like it's still in a downtrend as long as it can't get back up above the 50 and or the T line. We did HZNP. I'll skip me. K short. Must have skipped you. I don't remember seeing this one. And Kellogg. Yes, stay short. That's a bearish J-hook pattern. And was it HL? HL, yeah, Hecla, look at the wedge formation. Right now, I wouldn't be long or short, but I'd be ready to buy it if it broke through the upside. I'd be ready to short it if it broke down through the 20. We're still holding Nally. As long as it doesn't do anything real dramatic, it's still paying like a 13.5% dividend. What time frame do you recommend focusing on when doing intraday trading? Well, if I'm a swing trader, so I use the daily charts. If I'm trading something like crude oil or the dollar, I'll use the 10-minute chart. EAP. EAP, another one that wouldn't be long or short until it breaks out through the $41 area. Yeah, there's just nothing there. No, we won't have a session on Monday night. We might on Tuesday, though. What about the... we'll know better tomorrow on whiting. If they back it off, that means you're going to have 3 or 4 days of coming back to the T-line and doing a J-hook. If they open positive and trade positive, you obviously hang on to your calls. B-set. Notice the little wedge right here, and they broke out. Probably doesn't look like it's a big volume stock, but kind of had that fry pan bottom breakout. You just stay long in this one as long as it stays above the T-line. I think we did SSY, the very first one, didn't we? Yeah, this one needs to keep climbing back up to the T-line. If it fails there, you come out of it and go short again. XLF failed at the 200, I'm sorry, at the 50. So just watch to see if there isn't a bobble back to the T-line. And then if they support and come back up through, that's when you can really be buying. Are you matching account returns that Rob Roy is doing in his program? I don't know what he's doing in his program. The reason we have other speakers on all the time is because my method of teaching might not be what hits somebody's hot button, or might not be the nature of the way they are like to trade. So that's why we have all these other traders on. We do a lot of vetting to make sure we're not getting the promo scammer. So the guys that we do usually been around for a good while, and basically, if you learn their method, or even if when they come on and do their sessions, if you find one little tidbit about their session that they told you that you'd like, you can always implement it into your style of trading. Now, there's lots of people in our chat rooms that also belong to Rob's room or Hubert's room, but they use candlesticks to kind of confirm and or enhance their trading mechanisms. The wedge formation. Wedge formation is where, whoops, I'm typing wedge, that's just to find howdy do. The wedge formation, let's do it on the NASDAQ. It's more, you can kind of see if you drew, where's trend? You can kind of draw a line down through here. You can kind of draw a line up through here, kind of a wedge. And usually what happens is this wedge keeps bobbling until it gets out here, and then it breaks one way or the other. Also known as a pennant. Rite Aid. Rite Aid is still stuck in this downtrending channel. It needed to break out. It's still above the T-line. If it trades positive and breaks out, now you've got a wave 1, wave 2, wave 3. If it opens lower and trades lower, you're still in this downtrending channel, which is probably taking you back to the 50 again. I think we did KKR, didn't we? Nice little J-hook with a doji sandwich breaking out. Okay, Allison, yes, all right. Paying 11.3% on Nally. Yeah, so I've got that in some accounts where they just want to hold and get that 11.3%. Yes, and that's another reason that it's people. We got good people sharing information. There's quite a few people in other people's rooms, and they bring that information back and kind of use candlesticks to kind of I want to say fine-tune that trading. And so a lot of information is being shared back and forth. FXCM. Nothing there. If I owned it, I would sell it. You can always put a buy stop above the T-line. If it breaks up through there, they're starting to come back into the trade. Right now, this QLIC is still caught in this downtrending channel. I would be more apt to go short, but notice the magnitude of the move of this stock over the last 6 months. Not anything to get real excited about. Home Depot, just a slow, steady uptrend. All you can do here is stay long if you like it. I wouldn't trade it because it's such a slow mover. But if it's still in a steady uptrend. SCX, another one that came up through the 50. It needs to open positive. If it opens lower, you close it out because that means this downtrending channel is still in effect, that they're probably moving this all the way back to the 200. Okay, I guess that's about it. The symbol for Nally is NLY. It's just a REIT. Do you have this kind of sessions for the options room? Man, I know the information in the options room is probably a lot more, what do I want to say, better from the existing traders in there. We got a lot of good traders in there that have different trading programs. Now, during the day, I'll come in for a few minutes because I really can't add too much there. Most of those people are finding the best trades and able to discuss the trades and the setups. Don M usually has lots of good trade setups. Nora also, Big Al. And again, the nice thing about that room is they're all willing to share why they bought and what the method was that they found that trade and how they put it together. Oh, let's see. Soy Oil. I don't know whether no, that's Southern Company. if that's SO. Let's see if that's, oh boy, ZSOEH5. Let's see. I don't trade soy oil, so I haven't in years. That's soybeans, which is just sideways. I'll have to track down soy oil, Sandy. Railways, yeah, they're just slow uptrend. Usually the rails are hard to trade because they move so slowly. S-Fun. S-Fun, you can be buying this one on a positive open, but then it has to break through the 50. What significance does after-hours trading have upon the open of the next day? Not very much. Usually, because the volume is so low and the available stock is so low, that the real decisions aren't going to be made until there's the big volume on the open. Because if you're a big institutional trader and you need to buy 200,000 shares of a stock, and after hours there's only 13,000 on the ask side for the next 4 points to the upside, you're definitely not going to be buying stock in the after hours. And a lot of times when there's an earnings report or some announcement and the stock price starts whipping around, that price has absolutely nothing to do with what it will do on the next day's open when everybody's making their decisions of whether to be buying or selling. What group did you say you make your long-term picks in? What group? Oh, we have a long-term picks area on the members area. And that, I think there's a newsletter comes out once a week just describing what's going on in the different sectors. That's for the people that can't sit and watch minute by minute or hour by hour a day. Let's see, Chicago Bridge, I think we did, which, let's see, let's make this a bit more pronounced. You could be buying this one, but it needs to break this downward trend channel. The ZLH, LH is lean hogs, I thought. Not coming up. Okay, let's call it a night. Well, there's only 4 sheep out there right now. We're missing one. And I don't know the number for the neighbors to find out what's happened to the one of the big ones. But they've gotten so bold now, they come right up to our very front door because I've got a big trash can of bird seed that I fill all the bird feeders. So the unfortunate things about sheep is they aren't very smart, which means we got a lot of poop piles right on our front walkway. So anyways. All right, everybody, have a good evening. We will see you bright and early in the chat rooms tomorrow. That's right. Hope nothing bad happens.